Hey people, I welcome you back to Caroline's Online Academy. We are in the series of videos in which we are solving previous year questions and sample question paper questions from the chapter Dissolution of Partnership. And currently we are solving journal entry based problems. And now we have a question from the 2020 All India attempt, a 4-mark question in which they wanted to pass journal entries for 4 transactions given. Without further ado, let's start solving. Pass the necessary journal entries for the following transactions on the dissolution of the partnership firm of Tony and Rony after various assets and liabilities have been transferred to realization account. So basically, all the assets and liabilities have been transferred. Our job is just to realize the assets and settle the liabilities. And they've given us 4 transactions. I prepared the format here for you of the journal, and now we're going to solve. The first question is an unrecorded asset of 2,000 and cash 3,000 was paid for a liability of 6,000 in full settlement. So we have sold an unrecorded asset for 2,000 and paid cash of 3,000 for a liability of 6,000. As I've told you already, my dear children, whenever an asset goes out, its income for the firm and realization account will be credited. And if a liability is settled, realization account will be debited. So for the unrecorded asset 2,000 going for the liability to the extent of 2,000, that is no entry. That is realization account debit to realization account. However, we also paid cash of 3,000 for settling this liability. Am I right or not, my dear children? The unrecorded asset was not given in full settlement of 6,000. We gave unrecorded asset. On top of that, we also gave 3,000 rupees cash. Whenever cash goes out of the business, or whenever money goes out of the business, bank account will be credited because money is going out of the business, obviously. Am I right or not, my dear children? And whenever we settle a liability, realization account will be debited. So the journal entry here for the first one would be realization account debit to bank. Very simple, my dear children. Money is going out of the business, therefore bank account is credited. And if a liability is settled, realization account will be credited. And here, only 3,000, we'll only pass journal entries for 3,000 rupees because for the remaining amount, we have given a unrecorded asset. So that when unrecorded asset goes out, realization is credited. Any asset goes out after transferring to realization account will be credited, whether it is unrecorded or recorded or anything. So the journal entry for that part would be realization to realization. So no entry will be passed. Only for the remaining 3,000, we have to pass the journal entry. And so realization to bank account, liability settled. All right. Moving on to the next one. 100 shares of rupees 10 each have been taken over by partners at market value of 20 per share in their profit sharing ratio. Though it looks like a very, very difficult problem, a lot of complications, too many numbers there and all, it is actually a very simple thing, my dear children. You just have to understand the gist of the statement. What is actually happening here? The partners have taken over the investment in their profit sharing ratio. That's all. So partner has taken over a asset. When a partner takes over the asset, whenever the asset goes out, realization account will be credited. Am I right? And the partners are the one who are taking over the asset. So they will not pay money. They will tell you set it off against my capital dues. Understood or not, my dear children? So Tony's capital account debit, partner's capital account will be debited as the liability towards the partners by the firm is reducing. Rony's capital account debit to realization account. Why realization account? Whenever an asset goes out, realization account will be credited. Am I right or not, my dear children? To realization account. Investments taken over by partners. All right. So now, for how much did they take over the investment? That is the next question. The shares are 10 rupees shares, but the market value of the shares are 20 rupees per share. Am I right or not, my dear children? So they have taken, we are only bothered about the realizable value. They've taken 20 rupees shares of 100 or 100 shares of 20 rupees each. So 2,000 rupees is the value of the asset that has gone outside. So I'll write it to realization account. And this has been taken over by Tony and Rony in what ratio? In their profit sharing ratio. Which happens to be 3:2 from the question. So 2,000 into 3 by 5 and 2000 into 2 by 5. Understood or not, my dear children? That's it. You just have to understand if what is actually happening and then pass a journal entry and then calculate the numbers after that. The third one, stock of 30,000 was taken over by a creditor of 40,000 at a discount of 30% in full settlement. So a stock of 30,000 was taken over by a creditor in full settlement. Whether he takes it at a discount or premium, doesn't matter. He's taken the stock in full settlement. And the liability is settled, the journal entry, the account that will be debited is realization account. And when asset goes over to the business, realization account will be credited. So the journal entry basically is realization account to realization account, and therefore it will be no entry. No entry will be passed for this transaction. And the fourth transaction, my dear children, is expenses of realization of 4,000 were to be borne by Rony. Rony used the firm's cash for paying the expenses. So expenses are borne by a partner. When the expenses are borne by the firm, it's an expenses of the firm, and therefore realization account will be debited. But if the expenses are borne by a partner, it is an expense of the partner, and therefore partner's capital account has to be debited because the liability towards the partner reduces. Liability of the firm towards the partner reduces. So Rony's capital account will be debited. Did Rony pay out of his pocket? If Rony had paid his own expense out of his pocket, then there would be no entry here. But unfortunately, that didn't happen. What happened? Rony paid using the firm's cash. The firm's money is going out. And whenever firm's money is going out, bank account will be credited. So the journal entries to bank account. Expenses on realization paid using firm's cash. And the amount is given in the question directly. It is 4,000. So we'll write 4,000 here. That's all, my dear children. See how simple it was. It will fetch you 4 marks in no time in the board examination. I'll meet you guys with another problem from the same chapter in another video, another previous year problem. Until then, see you. Bye-bye.